YouTube? Welcome back to another video with the Houseman Investing channel. Today's video we're going to go over about 75 or more ETFs that I have added to the watch list or re-added to the watch list for today to swing trade this month. So some of them are, not ETFs, but most of them are. So we'll get right into it, and I'll try to make this as quick as possible. So the first one we have is Store Capital. This is a REIT, ticker STOR, and this is going to be a nice monthly dividend payer, with low volatility. Next, this is another REIT. This is in the healthcare sector of the market, ticker OHI, Omega Healthcare Investors. So once again, you'll get that nice monthly payout for holding this position as well. Then we have Ltc Properties. This is another REIT. Once again, a monthly dividend payer. Then we have Stag Industrial. This is another REIT in the industrial sector, and it's going to be another monthly dividend payer as well. Then we got XLB Material Select Sector Spyder ETF. Spyder has great funds, ETFs. All these ETFs that I'm going to go over are going to give you great diversification, low volatility, with a nice steady passive income from dividends. So this is going to be the top material companies in the market, all in one ETF. Then we got a real estate select sector Spyder ETF, ticker XLRE, and this is going to be the top real estate funds out of the market, all in one ETF. Then we got a Schwab US REIT ETF, ticker SCHH. It's going to be another monthly dividend payer, and it's going to be a great REIT. It's going to have all the good REITs here in one, ETF right here with Schwab. Then we got ticker RWR. This is a Spyder Dow Jones REIT. So the best REITs out of the Dow Jones are all going to be in this one ETF. Once again, a great monthly dividend payer. Then we got Wood, ticker WOOD. This is an iShare Global Timber and Forestry ETF. So the top companies that have that take part in timber and things of that nature, they're all the top companies of those are going to be in this ETF as well. Then we got a Vanguard Industrials Etf, ticker VIS. This is in the industrial sector, so the best industrial companies are going to be in this ETF. Then we got ticker IBUY, Amplify Online Retail ETF. So the best online retail companies all in one ETF. Then we got SRLN. This here is going to be a senior loan ETF from Spyder and Blackstone. So it's going to be a nice dividend payer as well. I'm not going to go too in depth. I got too many tickers here. When I do purchase them, when I do buy into these positions, I'll kind of go over them a little bit more, but I'm just trying to breeze through this really quickly. We got ticker FTSL, First Trust Senior Loan Fund ETF, IGF, iShares S&P Global Infrastructure ETF. So the best infrastructure companies in the world provided by iShares are going to be in this ETF. Then we got VMBS, a Vanguard mortgage-backed fund. Then here we got ticker REM. This is going to be a mortgage recap ETF. So another great monthly dividend payer as well. Then we got ticker PULS. It's an ultra short bond ETF. Bonds are pretty much like savings account. They're not going to fluctuate very much. They're not going to grow, but they're also not going to lose very much. But they're going to pay you a nice dividend. So they're going to be a great alternative, to savings accounts, because you're actually going to make some interest on your money. So it's just somewhere safe to place your money, kind of like a hedge against the the stock market. And then we got GDX. This is something I swing trade heavy all the time. I'm currently in. It's a gold miners ETF, so the best gold mining companies on the market are going to be all in this ETF. Then we got SHE, ticker SHE. This is a gender diverse index fund. Then we got DGRO, a core dividend growth ETF. So the best dividend growth companies are going to be in this ETF. Then we got SDY, a Spyder S&P dividend ETF. So the top dividend paying companies out of the S&P 500. Then we got DVY, iShares Dow Jones Selected Dividend ETF. So the best dividend payers out of the Dow Jones are going to be in this one sector. With a lot of these, you're going to have overlap, but they all kind of use their own strategy, to how they pick their stocks. Then we got IDV, iShares Dow Jones International Select. So this is going to give you a great worldwide margin here. Then we got iShares Core US REIT ETF, ticker USRT. And this is going to be another monthly dividend payer. Then we got HYLB, Extractor High Dividend Yield ETF. Then we got USHY, iShares Broad US High Yield Corporate Dividend ETF. Then we got SHYG. This is a 0 to 5 year corporate bond. We got ANGL. This is something I've already swing traded. And this is going to be a high yield angel bond, fallen angel bonds. And then we got HYS, a 0 to 5 year high corporate bond. XMLV, a Power Shares S&P 500 mid cap low volatility ETF. So it's going to focus around mid cap companies, but the ones with very low volatility. Then we got XLLV. This is going to be a Power Shares S&P small cap low volatility. So similar to the last one, except for with mid cap companies, it's going to be small cap, and it's going to be the ones with the lowest volatility. So just keep in mind, you're going to still get that dividend payout as well. Then we got LDUR. This is an enhanced low duration active ETF. So it's actively managed. So it's going to be a nice way to get into that sector as well. Then we got IDLV, Power Shares S&P International Develop ETF. Then we got EFIV, Spyder Sp 500 ESG ETF. Then we got XJR, iShares Screen S&P Small Cap ETF. XJH, iShares Screen S&P Mid Cap ETF. Then we got IVW, iShares S&P 500 Growth Fund. So the best growth stocks out of the S&P 500 all in one fund. Then we got a Vanguard Small Cap Growth ETF. So the best growth small cap stocks are going to be in this ETF. Then we got an iShares S&P 500 Value ETF, IVE. So the companies with the greatest value that are pretty much beaten down with a lot of upside are going to be out of the S&P 500 in this ETF. Then we got an iShares Value Index ETF, ticker EFV. Then we got ticker PLD. Then we got this is also going to be a nice read as well. Then we got ticker EXR, Extra Storage Space. This is one I already own long term. Something I'm going to continue to swing trade. Great fundamentals, and also a monthly paying dividend. Then we got XRT, a Spyder Sp Retail Etf. So the top retail companies are going to be in this ETF. Then we got VTR. Then we got SPDW, a Spyder Portfolio World X US ETF. We got SPEM, a Spyder Portfolio Emerging Markets ETF. SPLT, a Spyder Portfolio Long-Term Treasury ETF. SPIB, a Spyder's Portfolio Intermittent Term. We got SPAB, Spyder Portfolio Aggravated Bond ETF. SPSB, a Spyder Portfolio Short-Term Corporate Bond. SPLG, Spyder Portfolio S&P 500. We got John Deere, ticker DE. And John Deere is something I saw on the Motley Fool. I seen their new tractors. They're self-driving, and they also like those little sprayers that spray the fertilizer and things like that. They now have them to where they can determine, the stuff they need to spray from, like the wheats and stuff like that. And of course, John Deere is one of the most popular and durable tractor brands out there. It was beaten down like 60% over the pandemic and still finished, over 50% on the year. This thing has great growth potential of like 25% per year. It's just been doing outstanding, just steady running up. Also pays a nice dividend of 1.13%. 22 analysts got a 64% buy rating. And urbanization, it'll drive demand for John Deere's construction products. And John Deere's customers, they have demonstrated exceptional loyalty, and long-term agriculture demand will increase with a growing global population and increasing consumer wealth. So more people, more money. That industry is going to grow, so they're going to grow revenue. They have been killing. They killed EPS all 4 quarters last year, and basically they engage in manufacturing the distribution of equipment using agriculture, construction, forestry, and turf care. It has a few different segments. The agriculture and turf segments distribute manufacturing a full line of agriculture and turf equipment and related services parts. Their construction and forestry segment offers machinery and service parts used in construction, earth moving and road building, material handling, and timber harvesting. The financial service segment sales and leasing by John Deere dealers of new and used equipment. This company's been out since 1837, so something I already own long term, and I'm going to add it back and swing trade it some more. Then we got ticker FTB. This is a First Trust Biotechnology ETF. Then we got XLF. This is a financial selector Spyder fund. So the best financial companies are going to be in this Spyder fund. Then we got ticker IBBJ. This is a ETF Solutions Defiance Nasdaq Junior Biotechnology Fund. Biotechnology has really been on a run up. This one here is up 35% over the past year. It barely pays any dividend of 0.01%, but it is a great growth stock or growth ETF. It's going to focus on the small cap biotech and pharmaceutical companies listed in the Nasdaq. Then we got ticker SCZ. This is going to be an iShares small cap index fund. This one here as well has been up, over 10% on the year, but keep in mind it was down 40% over the pandemic. It typically grows about, I would say 7% per year over the course of time, as well as paying that nice dividend of about 1.5%. And this basically tracks small cap companies from Europe, Asia, and Far East. So this will give you exposure to other markets outside of the United States. Then you got ticker IJS. This here is going to be a iShares S&P 500 small cap 600 value. This was beaten down about 45% during the pandemic. It finished the year up 1%. This typically grows about 10% per year, with also paying you a 1% dividend yield. At the moment, its PE ratio is super low, so it's super undervalued at the moment. And this tracks the small cap U.S. stocks, and they use 3 factors to select value firms from the S&P 600. Then we have ticker MDY. This here is a S&P mid cap 400 index fund, similar to the small cap 600 fund. Then we have an iShares core S&P mid cap ETF, IJH, and this is going to focus on mid cap companies, out of the S&P. Next up, we got Pfizer, ticker PFE. This is something I already hold long term. It was beaten down during the pandemic. It's pretty much came all the way back, and Pfizer usually grows, probably about, I would say 2% a year, plus it pays like a small dividend. Well, actually a decent dividend because it's 4.13%. So you get that nice 4, 5, 6% return on your money. I'm currently down in the position about 12.31%. But Pfizer is a strong play. They have the FDA, reviewing their growth hormone deficiencies. They have the vaccinations that just came out, and it still has a strong analyst rating of 47% buy. And their pipeline productivity is improving with several successful recent drug launches, in particular drugs. This stock supports a dividend yield of over 3%, and we expect steady cash flows to support the dividend. Pfizer's decisions to divest its outpatient division should result in faster growth and innovation of the company. They've been doing good on EPS all of 2020. I got back in this position around December the 12th, so it's a new swing trade for me for this month. And they basically engage in discovery, development, and manufacture of healthcare products, specializing in medicines, vaccines, and consumer health cares. It has a few different sectors involved in, supply of branding, generic injectable products, and selected branded products, including, anti-infinitives. This company's been out since 1849. A great exposure to the healthcare sector, and overall, a decent healthcare stock. One of the most known is Pfizer. Then we have PFEB. This here is an innovative S&P 500 buffer. This was beaten down about 20% over the pandemic. Still finished 5% in the positive. This is a new IPO, started back in February, so up 5% on the year. It's more of a growth play. Doesn't pay any dividends, and it aims for Pacific buffer losses and cap gains on the S&P 500 over a Pacific holding period. Then we got ticker BRZU. This here is going to be a Dexron Daily Brazil Bulls 2x share. So this gives you exposure to another market. This one here was beaten down about 100% during the pandemic, of course, because it's a 2x. Still finished the year up above, almost up 200%. This thing usually grows about 30% a year. Also paying a small dividend of 0.87%. And it basically is tracks all the mid-cap large and mid-cap Brazilian companies, but it's a 2x, so it's going to be twice as good or twice as bad as those stocks perform. But just another exposure, just more exposure to another market outside of the United States. Then we have NIL, ticker NIL. This here is a 3x bull for home builders and supplies. It was super beat down during the pandemic, about 90%. Still about 30% upside in this company. Barely pays a dividend of 0.01%. It's more of a growth play. Typically it grows about 11% a year, as the sector of home building and suppliers does well. And with everything opening back up, the construction, these U.S. construction companies like home construction sectors, they're gonna make some good money. With everything opening back up, people getting back to work. People are going to finish those do-it-yourself projects that they wanted to finish. There's going to be a lot of new homes built and things of that nature. Then we have DPST. This here is Dexron Daily Regional Banks Bull ETF as well. Double leverage. Then you got XLP. This is a consumer staples selector spider fund. Then we got IXUS. This is a Total International Bond Fund. Then we got IEF. This is the iShares 7 to 10 year bond. Then you got SHY, SHY. This is a 1 to 3 year Treasury bond. Then you got BSV, a Vanguard short-term bond ETF. Then you got MTUM. This is a momentum factor ETF from iShares. Then you got IOVA, biotherapeutics company. Then you got EXAS. This is going to be Exact Sciences. Then you got IBMK. This is the iShares bond set for 2020. Then you got IBML. Also a iShares bond set for 2023. IBMN, this is an iShares bond set for 2025. IBMM, this is an iShares bond set for 2024. Then you got IBMQ, iShares bond set for 2028. And IBMP set for 2027. And IBMO set for 2026. So those are the 70, I believe it's like 76, 75, 79 stocks or so. Dive into them, take a look at their balance sheets, their fundamentals. Like I said, when I purchased these positions, I'll give a more in-depth review of these positions. But I just didn't want the video to be too long. I was trying to keep it under 20 minutes. I appreciate y'all tuning in, though. Hit the like button, sub, hit the bell, follow my journey. I'll come at you guys with more stock picks, daily gains. I got 12 brokerages. I show all my buys, my sells, my deposits, my withdrawals, my gains, my losses. Completely 100% transparent. And I do, by the way, invest in, all the major companies that everybody else votes, invest in, like the blue chips and everything like that. And I am up massively on all of my brokerages, so I'm doing pretty well. Once again, I appreciate you guys for tuning in.